This is the Value Investor Podcast with Tracy Reineck. All things value, all the time. Listeners of today's program might have an interest in value stocks similar to those Tracy shared today. If you'd like access to her Value Investor Portfolio Service, which includes real-time buys and sells, market insights and commentary, visit www.zacks.com/valueinvestor or call toll-free 1-888-775-8348 between 10 a.m. and 6 p.m. Monday through Friday. Outside the U.S., call 1-312-265-9309. Again, that's www.zacks.com/valueinvestor or toll-free 1-888-775-8348. Outside the U.S., 1-312-265-9309.
I saw this phrase the other day when I was on Twitter that was talking about the increased volatility that we've been seeing on the stock market. And all it said was, embrace the panic. And I thought that was an interesting little phrase because it struck me that this is the perfect type of philosophy for value investors, that when there is a panic selling, kind of like we've been seeing recently, although panic might be a little bit of a strong word, but we've seen the 90% down days, which indicates that basically everybody wants to move out of the stock market. They're selling everything. So I consider that a little bit of a panic. So when you see that, the hallmark of value investors is to buy when everyone else is scared to, and when they're selling and panicking, you want to be in the 10% and not the 90% that are selling and moving to the sidelines. But that is hard to do. But, as value investors, you start to look around when you see a couple real volatile days like we've been seeing. And at least for me, I start to think, what has gone on sale? What are my favorite stocks doing? And maybe I can get them a little bit cheaper here. So, they might have been cheap already. They might have been value stocks, but now they're even more on sale. So I did a screen of stocks just to look and see kind of what is down more than 5% over the last week. And I also screened with stocks with PEs under 15. So they were already value stocks to begin with. And then I threw in the Zacks rank of 1, 2, or 3, which is the hold. So that would give me, pretty wide universe, I thought. And it did. So I'm going to give you a few of these value stocks that have gotten cheaper in the last week, because I do believe in embracing the panic and looking for opportunities. So the first one is called Delta Apparel, and its ticker is DLA. You probably never heard of it. It's a real small cap. It only has a market cap of 132 million. It's real volatile because it's a small cap, but these shares have been down 6.8% in the last week because it's a small cap. It's getting beat up a little bit here, but its PE is only 11.6. It is a Zacks rank number 2 right now. This is like a lifestyle, and they do t-shirts and other branded activewear apparel, and they sell in specialty stores, boutiques, department stores, and to the U.S. military. So yeah, it's apparel, it's retail that hasn't been a good area, which is why it's in the value range already and why it's probably already getting beat up, but something to look at, an opportunity might be presenting itself there. Okay, the second stock is called Koppers Holdings, and that's with a K, Koppers, and the ticker is KOP. These guys make carbon compounds, and they make treated wood that you would find in, say, railroad ties. So the railroads are among their big customers, but they also make the same treated wood for decking. So they do performance chemicals and these carbon compounds. They are also a small cap, but a little bit bigger than Delta at $602 million market cap. They have a forward PE of 14.6, so not quite as cheap, but the shares have fallen 6.4% in the last 5 or 6 sessions here. And they're also Zacks ranked number 2. They were trading near their 52-week high for quite a while here and hitting new highs. I used to own them in the insider trader because a whole bunch of insiders a couple months ago, I would say 2 to 3 months ago, were buying a lot of shares in that company, even though the shares were hitting new highs. So they like something over there, and that prove to be true, but this is like a slight downturn here. It could be an opportunity to get into this chemical area if that's what you're looking at in a small cap chemical company. So that's one to keep on your list too. And now I'm switching over to slightly larger company for the third stock. This might surprise you, but it's Gold Fields, which is a miner. They have a $4 billion market cap. They're in South Africa, but they operate 8 mines in Australia, Ghana, Peru, and of course, South Africa. Gold is, it's going to move when the gold moves. So it's down 5.6% in the last 5 sessions. But these gold miners have pretty good Zacks ranks here because the earnings are going up as the gold price has increased this year. So they are Zacks rank number 3, hold for right now. But their PE is 12.4. So they're pretty cheap too. A lot of these gold miners are actually pretty attractive for value investors. And I put one into the value investor portfolio a couple months ago. But they have had a big run this year. So it's something to look at. It's down a little bit here in the last week. But again, this one will move mostly with the price of gold, obviously, up and down. So it could be kind of volatile there, especially ahead of the Fed meeting. And then I brought a fourth one because I noticed on the screen I ran that 16 of the stocks were REITs. And that was the biggest, worst performing sector, I guess you could call it, on the list, which was pretty extensive. So I did think, what's going on in the REITs that suddenly no one wants to be in? Because these were the hot area along with utilities and any other dividend paying stock. Everybody's been moving into these dividend payers over the last year or two. So I'm kind of surprised that the REITs were down big, but I'm going to give you one here. It's called Sunstone Hotel. The ticker is SHO. And they are down 8.5% in the last week. So this could be a real buying opportunity here. They have a forward P of just 10. Their dividend is a little bit on the lower side, though, for some of the REITs. So they're only paying 1.6%, but they're based in California and they own 28 hotels, mainly under the big names you would know, like Marriott, Hyatt, Hilton, and Fairmount. They have about a mid-cap stock, $2.6 billion market cap. But some of the other REITs I also saw included like senior living REITs, some other medical type of REITs. So they weren't all hotels. So I couldn't figure out any pattern except they were all REITs. They all pay dividends and they were all down big in the last week. So that's an area you might want to poke around in if you're interested in getting that dividend and kind of watch and monitor to see if you can get some deals there. So let me recap again what stocks I have for this week because there are a lot of opportunities. There were definitely more than just these. A lot were in the retail as well. So we had a lot of REITs, some retailers getting beat up out there yet again. But as value investors, we like to find, opportunities in the areas where everybody's fleeing and where there might still be some good fundamentals. So the first stock was Delta Apparel, again, DLA. Koppers Holdings with a K, and their ticker is KOP. We have Gold Fields, and their ticker is GFI. And then Sunstone Hotel is the REIT with a ticker of SHO. So definitely try to embrace the market panic, as I call it. I know it's hard, but there are opportunities out there, and we'll kind of see where it goes, or put these on your watch list and watch and see if you can get them even cheaper, because cheap is the name of the game, and we want value stocks with some solid fundamentals. So that's what I'm giving you today. And be sure to check out all of our other podcasts on value stocks, because we give some good value stocks every week and some good areas that you should be looking in. So I'll see you again next week.